Okay, we're getting started here now, going over the November trade setups that occurred on Boomerang Day Trader. This was the blog post that I sent out here, and I show up to $25,000 gain. The actual total amount, I'll show you in a second. It's right here in the briefing. Here is the total recording of the setups. Here. Now, by the way, there were some emails I sent out. These were not any kind of what do you call them, testimonials or anything. I just copied the emails and put them in this email here. These are the kind that I get every day. People are getting great relief from Boomerang Day Trader because you'll see in a minute when we go over these setups, the enthusiasm is just tremendous because traders that were previously grinding with trading or were trying to figure out how to trade the market. He said, I used to dread looking at charts, wondering if I'd be a winner or loser. This is a terrifying way to show up to work every day going, well, am I going to make 500 bucks or am I going to lose 1,000? You know, it's frightening when you don't know what you're doing and you just go into webinars and you're going to get different indicators. You're trying to bunch them all together and figure out, try to morph a system together. I guarantee you that's not going to work. You might have some winning days. You have mostly losing days. That's the way the market is. Trust me, I don't say anything here on these webinars that I haven't been through already. And he says on the losing days, I'd go back and forth, look at them, and I'd usually done something what was wrong, you know. But these are just all wonderful testimonies, and I thank you all so much. Probably most of you are here on the webinar, and thanks again. The hard workers who really pay attention to what I'm going to say today are going to make the money. It's not that hard to trade with Boomerang. The markets are tricky. The markets have things you have to learn. You have to get used to the environment. But listen to me. This is very important. It's just like anything. If you decide I want to be a pro football player, you're in college and you say, that's it. This is for me, pro football. I want to go for it. I want to get to the top. I want to trade. I want to learn how to play football and everything. Well, if you don't think you're going to get a broken ankle along the way, possibly you have to consider that you might get permanently injured and be in a wheelchair the rest of your life. If you don't plan on getting a broken finger or a bunch of those, you're in the wrong game. I'm telling you, why would you want to be a pro football player and not think you're going to get hurt sometimes? You see? Same thing as you say, I want to be a trader. I want to go in and trade these markets, man. This is exciting and everything. Well, welcome to the club. You know, you got guys with $1 billion in their portfolio, and they got the most sophisticated equipment, and they want to trade too, just like you and just like me. And they're going to go in there, and they're going to try to take as much money out of the market as they can, just like we do following Boomerang. Well, the important thing is to understand the environment you're in and why trading is risky, why all these risk disclosures and everything. But having said all that and showed you all that, here's what we want to do is go into what happened with Boomerang in November. There were a total of 128, well, there was a total of 143 total Boomerang trade setups. Now, again, these are tracked, as I'll show you in a minute, in accordance with the exact core trading method. There were 128 winning trades out of 143. Wow. It was an amazing month. 15 lost trades only. That was the highest ratio we've had so far since I began tracking in August. 89% winning trades within the trade setups. Now again, you're not going to catch all of these, but you should be able to catch most of them. A few of them will move very quickly or whatever, or there'll be a choppy period. You might get a little bit confused, and we show you how to handle that. But these were meticulously tracked by myself, day by day, hand by hand, very slowly, as I went through these and counted these out and showed exactly what happened. Now, and I'm going to go over those live with you here on the webinar, and that's why I do these webinars. It's a disclosure thing, and it's just honesty. I've been in this business 14 years in the industry with a golden reputation of honesty, integrity, and thoroughness. It's very important to be thorough, and like I said, the way I report the setups, I haven't seen ever been done by any of the system developers. In fact, I'd highly encourage them to do it. Let everybody see how your system looks on the charts, scrolling slowly over the entire day, the entire week, the entire month. Let's see where your exact signals were. Did you get stopped out? You know, what happened? That's what I do. I show you exactly. Now, our system is based on a 3-point gain a 2.5-point loss. For those of you who are brand new, and I'll get into this when I show you the chart, we use a 450 tick chart as our default, and all the indicators for Boomerang are on there based on the NASDAQ contract. We use the NASDAQ, which is a much smoother and better day trading contract than the ES. And I'll show you why again on this webinar today. On the NASDAQ, we use 4 contracts as a default way. Now, if these big numbers scare you, or you think it can't be right because it's a big number, that's your own personal psychology problem, because I have traders that make this much every day. I've had traders that make more than this every day, and trust me, out in Goldman Sachs and places like that, there are guys that make a lot more than this. This is a monthly figure, and again, if it frightens you, that's not our problem, that's yours. I could have used 8 NASDAQ contracts as our default thing, and we would have showed up 50,000 for the month. But 4 contracts using about a $2,000 to $3,000 margin would be, approximately $10,000 to $12,000 account. So you can see that's a tremendous return on that size of an account. So you take one setup with 4 NASDAQ contracts and 3 points. You with me so far? 3 points in NASDAQ is 12 ticks. So you're moving at $20 a tick, it's $240. If we have a winning trade within a winning setup that I'm going to show you, just keep that in mind. Each winning trade within a winning setup on a small account of $8,000 to $12,000, somewhere in there, is going to be worth $240 after commission. Or no, I'm sorry. This I do it different when I calculate for the auto trade. This would be $240. Then commission comes out later. Let me show you that. On a losing trade, which is 2.5-point loss, that would be a $200 loss. So the total 128 winning setups was 30,720. 15 losing trade setups was minus 3,000. And commission on 572 round turns, average at about $4 a round turn. That's a self-directed account. That's if you're trading it yourself. It'll be a little bit higher for our auto trade service, but trust me, you'll find it to be well worth it when you have that second account working for you, if that's what you want to do. Again, email me at mohan@daytradersaction for information on our new auto trade program that's going to be starting at the new year. You can get on the newsletter right away, though, and get all the information going. Thank you. So the net gain after commission and everything would be $25,432. And again, all these trades that you're going to see, some people come who don't bother to study my work before sending a rather smart aleck question will say something like, well, it's easy to show it on the still charts after the... No, it's not. Well, first of all, I'm working harder to show you that, but it doesn't really matter whether live or still, because the setup is exactly the same whether it's live or on a still chart. If I sat here and did this live, we'd be on this webinar for 3 weeks. You can't do that. I'm showing you in still charts, but I'm trying to make a point to those who are even thinking that the system is so accurate and the rules are so precision that it doesn't matter whether it's a still chart or live chart. The setup is going to be exactly the same. So it's important you understand that. And again, the disclaimer showing that the trades and the setups are hypothetical. We have to say that because they're not live recorded trades. They're based on exact crystal clear methods of entry. If you want to see Boomerang demonstrated on a live trade, by the way, always come to the blog, boomerangtrader.com. That's where you'll find everything about Boomerang. We have video tutorials, which are short 5-minute videos, webinars that I've recorded, and then under our track record section, where we are in this section right now, I show you can get copies. Like this will be a recorded webinar today, and it'll be up in a day or two. But over here under video tutorials, you click on that, it'll take you to our entire library of short video tutorials on Boomerang. Watch this. See, you click here, and it brings up this down here. See, this is all you can scroll through, this entire library down here of videos, and you can look at those. Now, when I go back here and you go down here, Boomerang Day Trader Live Simulated Trade Demos. For those who want to see Boomerang live in action, I've made some live trades within the short 5 minutes. So I've had to speed them up and everything, but it still shows Boomerang operating live. And there's 3 different tapes on here showing a total of about 6 trades. You see that? So I'm just saying that if you want that, you can go onto the blog and see that. Not a problem at all. Okay, so let's get back to where we were. So now you have these figures in front of you, and they're recorded right on the blog there, so you can go over them if you want. If you have any questions on these, just email me at Mohan@Day-Traders Action. I'll be glad to show you. So let's get started here. This is the first day of 11/1 right here. Before we get started, I'll show you this. A lot of little preparatory things, but it's all good stuff, all good news. The Boomerang trading method is incredibly simple. It'll blow your mind once you really learn it, how simple it is. Those of you who are on right now who have been trading with Boomerang understand exactly what I mean. There's just a few rules to confirm the trades. However, trading the markets is complex and high risk. Regular dedicated practice is needed to succeed in understanding the market's various nuances and pattern sequences. Well, that's the same as the guy who says, I want to be a football player. He goes out, he gets in a couple games, he's all excited. His girlfriend's excited, his family's excited, and he goes in the next game and he breaks an arm. Oh, what happened? Why? That wasn't supposed to happen. Well, what do you mean? You're a football player. Huge, giant guys with muscles all over them are smashing into you. In fact, they want to take you out of the game if you're one of the star players. So that's called being interested in being a football player. Well, if you're interested in being a trader in the markets, regular, dedicated practice is needed to succeed in understanding the market's various nuances and pattern sequences. So if you use our proven approach, you will be able to be successful. It's not difficult at all. And we show you how to manipulate through the markets, how to get you through the markets and dance around the different things that are happening. I'm going to show you today. The rule is very simple. We look for trades when the white line crosses over the dynamic trend band number 2. I'll go over those in detail, in extreme detail in a second here. We look for the spread of the dynamic trend band and the white line that's crossing over to be about 2.50 points or less between dynamic trend band 1 and 2. This is the core setup and the most important one of all of them. It's the main one you want to learn. In fact, if you only focused on this one, you'd have very good success. It's very simple to see, very easy to follow. When those above conditions occur, you take a pullback to the signal line. Every single trade that we make in Boomerang Day Trader are based on a new trade channel and the earliest pullback to the signal line that we can get within the rules. So that's it. That's the core trade. There's just one. Now, there are some little advantages in taking a second level trade. When the dynamic trend band matches number 1 and 2, and you have a relatively steep dynamic trend band number 2, you can take a second level trade. And then another rule that's very important to know is when the dynamic trend bands match in color and you have a trade channel in that same direction, you can take that trade, as always, on a pullback signal line. And then this gets a little bit fancier here, and we're going to go over this in detail today. When there's a wide channel spread of 5 points or more after a second level move, you can go ahead and jump in on the next opposite trade channel without having to wait for the white line to cross over the dynamic trend band number 2. That's all that means. If you get a second level move, and it has to confirm, there has to be an arrow and everything for a second level move after a counter move, then you can go ahead and get in a little early. That's all it is. Now, today we're going to talk about when markets make these radical extended moves over levels 3 to 5. We've had a bunch of those lately, and sometimes you'll get them almost every day. I'm going to show you exactly how to handle those today to stay safe, not get cut up in the choppy markets that inevitably occur after those, and I'm going to show you how to pre-identify them. The key to boomerang day trading and the key to the markets is because markets get choppy. There's a lot of programs out there. Sometimes the volume slips. There's all kinds of reasons. But you got to avoid taking trades in choppy market conditions. You become very adept at using what's called the volume meter. This is one here today, and I'm going to bring this up now because it's really timely. Here's today's action. Now we're rolling into Christmas. This is holiday period. A lot of big traders are taking off. I know the markets got hammered today, but that was, well, let's just say that was planned. I won't go any further, but I can show you in the, anyway, email me if you have any questions on it. It's all rigged anyway. It doesn't matter. The average volume on NASDAQ every day is usually 700 to 1,000 contracts. Now, I've marked 700 right here on this green line. And when the market trades below this pink magenta line, which is 300 contracts, that's less than half the normal volume. Well, what would that tell you? That would tell you to be extremely careful or to just stand aside. Having said that, again, this is a volume meter, and you can find this under Boomerang Day Trader, boomerangtrader.com, the blog, under resources, how to build one. Sure, when the market opened, they were trading kind of normal volume for all of about an hour, and then look what happened. See this? I work off of this mainly. This is the 8-period moving average. All volume meters are designed on a 1-minute chart. Forget using it on the tick chart. It won't work. It's based on how much volume is coming in every minute. That's what the majority of players out there use when they're watching the market. So that's what we use. Look at this. So here's the normal volume, and then after the first hour, bloop, down they go, even dipping below 300. This is less than half the normal volume. This is called holiday volume. Yeah, they got up again. You can take the trade setups. I'm talking about current December that we're in now, just so you guys know. You want a little current information before I go into November. Make sure you build this volume meter. It's part of Boomerang Day Trader. Look. Described under resources, volume meter. It's right there in the rules. I've sent you these rules. It's right there. So make sure and build this volume. It just consists of the top part is the exact price, and then you just grab this and scroll it together, shrink it down. This is not important so much, but you want to have it there. This is the 8-period volume on NASDAQ, where I've marked a 700 level and a 300 level. This is the volume coming in on each contract. One can say, well, sure, look, there's 1,500 contracts, and yeah, but that was it during a 1-minute period. If you get in a trade setup and the volume drops down to 100 contracts, that's going to affect the markets. Look here, the volume dropping down. Now I'm going to show you the rest of the day. Just barely trying to get up to normal. And this was today with the market getting hammered. They're just, now into the close, everybody went, uh-oh. This market's getting hammered, and a lot of the hedge fund managers and all those guys who are based on performance, they've got to try to be on the right side of the market. So that's when the big volume starts coming in, because they start getting short. This is what drove the market down. And the proof of what I'm saying is you can see right after the close, the market just drops down to zero practically. So over the next 2 to 3 weeks, you're going to see very low volume. You should expect it. Look, the market doesn't have to give you anything. It doesn't have to give you any money. It doesn't have to trade at all. And you can't say, well, I needed to trade for the next few weeks. Well, good for you. It depends on the market. It doesn't depend on what you want or need, Your mortgage payment is not the market's business. The market doesn't really care when your mortgage payment's due or when mine is due or anything. It doesn't care that I want to get a new floor covering in my garage. It's or whatever it is, or you wanted to take that Hawaiian vacation, but the market's closed. Oh no, or it's volume so low. Anyway, I'll go over this some more later. I want to make sure and show you today's action just so you can see. So become very adept at reading the volume meter in the ADX. That was the ADX designed by the brilliant Wells Wilder back some couple decades ago. He's still brilliant. And the ADX, you can look it up on the internet, just do a Google search, learn all about it, and read our reports on the blog there. Anyway, choppy market condition. Okay, so this is one of the most important things of all. Choppy market conditions often, usually, just about always start with fast spike candles, which are larger than immediate previous candles, followed by reversal candles of similar size. Now, I've told traders that look for a 3.0, 3-point candle or more. Well, that's a good rule, but in this slower type of volume, probably 2.5 points or lower. Now, there's my ninja rollover contract thing. Just a quick aside here. You're going to get these pop-ups. They're going to keep reminding you that rollover is occurring. Make sure and change, over your futures. There's a link you can click on, shows you exactly how to do it. Now, I've already started my rollover, and I have a note on my desk, which is what you can do. Just write a note on the desk on one of those little yellow stickies or whatever. Check here, and then that won't come up anymore and disturb our webinar that I promise you we're going to get into in a second. This is for the new people and those who have just bought Boomerang. We get a lot of sales every week, so I just want to make sure everybody's completely hearing me go over this form with you. Fat channels form on these spike candles. We're going to see a lot of them in the next hour or so, and I know I'm running late, but this is all vital information. The fat channel forms when 2 or 3 of those spike candles come in, and you do not want to trade at the bottom or top of one of these fat channels. So you avoid the trade, and you just either consider a pullback to the dynamic trend band if the dynamic trend bands match or very close, and I'll give you another tool you can use in the Boomerang indicators today, or just leave the trade alone. Just say, hey, this thing is too intense. Just wait. It's spiking around, and we may go into chop mode. I don't want to get involved in that. Do not trade against a steep slope of the dynamic trend band. Over the next hour, we're going to see a lot of those, and I'm going to show you what to do exactly. I put here, wait for a flattening out of the dynamic trend band number 2 and a current price run forming the steep channel to start showing signs of shifting to a new bias direction. Right here. The current price run forming a steep channel slope to start showing signs of, I'm going to give you exact specific rules that aren't in here, but this is the rule, but I'm going to show you extreme details today of how to avoid the inevitable, almost always 90% guaranteed choppiness after a steep extended run move. We're talking level 3, 4 in some cases. I can guarantee we had one at the close today. I'm not going to go over today's, and then here's the chart examples. Now, for those of you who don't have a copy of this, we offer this for free to those who don't even own Boomerang. If you don't own a Boomerang, but you can prove to me that you're extremely serious about buying Boomerang, email me at mohan@daytradersaction, and I'll send you a copy of this core trading method. This is normally for owners, but if you're very serious and you want to go through these webinars and check the charts and verify what I'm saying, you can get a copy of this. I'll email it to you. Just email me at mohan@daytradersaction.com. Now, at the top, you have a plus and a minus, which allows you to blow up the charts and the copy. It also blows up the copy, and you can shrink it if you want to make a little pocket card to carry around or put on your trade desk up there, where it's closest to eye level. Here are examples of the chart of the winning trades. Here's an example of a double trade. Here's a core winning trade here, buying at the pullback to the signal line with the white line crossing over. Up they go. Here's a second level trade that fizzled out because you have a steep line and you have this color changing up here, and it crosses over here and forms a sell on the bottom. You see that? It's an example of a core winning trade. I showed you on the blog, there's all kinds of examples on there. Here's a classic second level trade. We're going to see probably 30 or 40 of these or more in the next hour. Level 1 trade, a level 2 trade, or a counter trade that fails. Have to see this arrow and everything. That tells you to watch for a second level trade, especially with this magenta line getting steep, this dynamic trend band number 2. That's what this is called. And a pullback to the signal line, there's a level 2 trade. See that? That's the example chart there. Here's another example of these long extended moves here. And that's where you have to watch for dynamic trend band 1 and 2 to change colors. Then you can take the trade. And I got another tool you can use today that you'll find very helpful for that. So anyway, go over these. If you don't have this, go ahead and email me and order it from me. I'll send it off to you, and you can go ahead and take this before you purchase Boomerang, and you can follow along with our video tutorials, the 5-minute ones, and these posted webinars. You can look at the charts, you can stop and start the webinars, and you can see the exact proof that our trading system based on these crystal clear rules is very valid, and that's why reporting the trade setups is a very valid thing to do. It's a new way of reporting a track record. It's something I'm trying to innovate and ideally get other trade vendor guys to do that. In fact, you should request it. Show me, why don't you do a webinar for free and show me a month of your system every day on every chart. Oh, watch them squirm and squeal. They're going to hate me for saying that, but let me tell you something. Something's got to be done in this country to clean up the fraud. It's everywhere. My God, I can't even believe it. It's not just in the government. We all know that. We have known that, especially been a follower of my daily directional forecast, but it's just rampant everywhere. It's just unbelievable. In fact, right now, without going into details, you have some of the exchanges, the exchanges that produce the data for us and everything, suing the CFTC. I mean, there's just so much, fraud going on. So I'm doing my little part here to say, look, system vendors, you guys want to gouge people that could buy Boomerang for $4,000, and you got all this fancy stuff going on. That's fine. Just show your system for free. Show it to the public like I'm doing here today, every trade, every day, and show us how good your system really is before they spend that outrageous amount of money. Of course, then I know you would want to forget that anyway and just come over and buy Boomerang, but again, I'm trying to start a new trend in the industry here. Okay, here we go. It's going to be a lot of work. Roll up your sleeves. We're going to start right now at lightning speed. Had to do some preliminary stuff there for you. I hope you found it valuable. I've got a little more at the end at the Q&A period. We'll go over a bunch of your questions for you. Okay, here's what happened. The market started out on November 1st, very choppy. You just avoid this. There's nothing to do here. This is, whenever you see these colors and dots changing color, flipping back and forth, that's Boomerang screaming loudly at you saying, stand aside, don't do anything. However, when you see the white line cross the dynamic trend band here, number 2, this trend band changes up here, and you see this margin shrink here, this spread between the dynamic trend band 1 and 2. Remember, we just went over the rule. You trade at this pullback to the sig line right here, which was 83.75, and they come down to 79.50, nailing that 3-point trade you want. Now, you may say, well, isn't this a buy trade here? Well, look at this. Look at the spike candle. The minute it hit that, it was easy to capture 3-point trade, 3 points if you got 83.75, 83.5. But what happened is they shot up here. Now let's measure this one. 82, and the high was 85.25. 3-point candle. That immediately should tell you, whoa, 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 because it's very exciting when those shoot off. They're like a shooting star. It excites the emotions of the trader, and you go, oh my God, I got to get in. The move's taken off without me. For Boomerang traders, this says, whoa, hold on, caution bell. Just picture alarm bells start going off. Not to trade, instead of to chase, which is what the natural human emotion says, oh God, the market's getting away without me, it's bullish. This is for Boomerang traders, says, bells and alarms start going on, and says, hold on, wait, don't trade, especially don't trade here at the top of this. You can see what form is a fat channel. Just wait and see what happens. Give it a while. Nothing to do. You got both dynamic trend bands the same color, but keep in mind, when the market, this is an important rule, when the dynamic trend bands are trading in parallel and everything's just trading around a flat red line like this, back and forth, just stand aside and wait until you get a crossover and you get some kind of confirmation of the market taking off in a confirmed direction. Otherwise, just wait. If it's not a crystal clear confirmed trade, just forget it. Those are the only ones I record on the setups anyway. I only record the ones that are crystal clear confirmed setups. Here's one here. Well, they did this and they did what? Thank God you didn't get in, because they shot in the opposite direction. You have a new trade channel opening here. Now you have matching dynamic trend bands with dynamic trend band below number 2 with a sell channel. That's an extra confirmation if it's on the same side. Obviously, that's just common sense, because dynamic trend band number 1 is the faster trend band. Now what you say, what should go off in your mind is trade next pullback to the signal line. This is going to pan out good. Now, I'm going to start right here on day 1 showing you this, so you can, and I will reference it throughout the rest of today. Another important feature, and I haven't talked about this previously, but it should be obvious for those who own Boomerang, because we do have these bias indicator 1, bias indicator number 2, and this is called hyper scalp, which is an add-on indicator. You don't really need it to trade Boomerang's exact system, but it tends to front run the others, and it has other valuable uses which are explained in the indicator. Again, that's a $195 add-on. You can look it up on the blog, and it's shown there by Hyperscalp, it says, and it gives an explanation. There's even some videos on there that explains about it. But for now, let's not worry about that. The one I want to have you be following is bias indicator number 1. That's this top one here. And I'm going to show you some things about that. So you may say, well, look, these are spike candles. Yes, they are. But you've got matching dynamic trend bands. Whenever that occurs, you got to try to get on that side on a pullback to the signal line. In addition to that, when you see these histograms change to a solid color, not a gray color, see, because you notice how they'll run gray and then they'll go solid, and sometimes they'll go from one color solid to the next color solid color. Those are very strong signals to get on that side of the market. So as this took off, you had a pullback to the signal line right here, and down they go. That's our winning trade number 1 and number 2. Okay. Right after that, we had a choppy period. We got a reversal that did not give us a second level trade. So we saw the crossover of the dynamic trend band here. I'm sorry, the white line over dynamic trend band number 1. The spread here tightened up to 250 or less. You see that? Here's what I mean. You put the cursor right up in there. Look on the far right side. See that? 73.25, 71, 2 1/4. So that's a tight spread. Here's a buy signal, or the buy channel opening up. Pull back to the signal line at 74, and up they run to 79. It was a huge fast spike up for our 3rd winning trade in a row. Now we're watching to see what happens, right? Spike candles coming in. Yes, I know it's a caution, but that caution is only when you're getting a new white line crossing over a dynamic trend band and you're trying not to get caught in whipsaw. Look at this, though. When the trend bands match, even if there's a wide spread, or even especially I should say if there's a wide spread, you got to remember that that's a very powerful signal that the market wants to go in that direction. If you combine that and just take a quick glance at your bias index number 1, bias indicator number 1, and see that that is turned red, you got to trade that pullback to the signal line, because they're going to make a strong move to the downside. Once you get good at reading all this with Boomerang, yes, you can sometimes take a chance and hold out. Say you're 4 contract trade, you got 4 here, you get short, take 2 off, or half your position on the 3 points that we recommend you scalp out, and then let the others ride and just peel them off as they go down. See what I'm saying? Once these thinner lines in this histogram start crossing over this 250-point level on either side, now the market's starting to get exhausted. Now, this is not, I'm not suggesting this to pinpoint top or bottom fishing. I'm just showing you some new tools today using the bias indicator number 1 to confirm trades that already have the dynamic trend bands matching. Just want to be sure you're getting on the right side. So Fourth winning trade in a row. We're waiting. No second level here. The white line crosses over the dynamic trend band number 1. This is too wide right here. We have to wait until this thins out. Notice this. Give you an example. 65, 61. It's too wide. It's got to be 2.5 or less. Right here. 64, 50, 62. Right here is where it's 2 points or less. Get a pullback to the signal line right here at 66.5, and they run up to 69.25. Didn't quite make 3 points. So the first thing you should think is, uh-oh, especially when this green candle drops down, then you get a gray candle. You're long at 66. They coming down here to 64. You can struggle and wait here, but probably on this, because this channel, you can see it got fatter. When they move up a little bit here, you should probably just exit the trade. That's part of the system. I mean, you're protecting yourself from something that's probably going to get stopped out anyway. Well, now what happens is the white or the dynamic trend bands match again. You've got red histogram here. Pull back to the signal line. 63.75 goes down to 59. Another 3 points there. So you lost a little on this one, made it back right away in this one. Now what happened here, this changed the whole pattern. So once you get a solid crossover of the white line crossing the dynamic trend band number 2, it resets the market's pattern. What I mean is that when you get another crossover, this isn't a third level up pattern. It's just reset everything. This is level 1. And you don't have a matching dynamic trend band here. That's one of the requirements of every trade, is that dynamic trend band number 1 has to match the trade direction you're going in the trade channel. So this is not a buy channel trade here. This one's not a sell, because we're watching to see what happens on the upside here as this white line came over and reset the pattern. This is a second level trade here. And again, bias index number 1 changes green, even though you're seeing spike candles to the upside, which I said earlier is a caution, and it still is a caution. But my God, look at this. You've got matching dynamic trend band colors. This just changed green on bias indicator number 1. So you trade that pullback single line, and the spikes work in your favor as a spike higher. Give us like our 5th winning trade in a row and one small stop out. Here you got the classic white line crosses dynamic trend band number 2. Right at this point, all the dynamic trend bands match color. You see that? So there's no need to wait for this spread to tighten when the dynamic trend bands match color. Did you hear that? When the dynamic trend bands match color and you have this white line crossover, just go ahead and trade the pullback to signal line. You don't need a tight spread here. And that's shown right here in this rule. I'm not making these up. I mean, they're right there in the rules. If the DTB 1 and 2 match in color, then a trade channel in that same direction of the matching DTB colors can be taken within the trade channel on a pullback signal line. That rule is exactly what this is. Crossover. Normally, if this was blue, we would wait till it changed to pink, magenta, and then we would have waited for this spread to be 2.5 points if this dynamic trend band number 2 had been blue also, cyan colored. But because here they both match, the spread is no longer necessary. You just get short. And I've just given you today, which you should have pretty much understood before, but now it's confirmed. Seeing these as being red is an extra confirmation that market's going to move on that bias side, which is to the downside, giving us our 6th winning trade in a row for this session, which was November 1st. Now, I know we got a lot of months left to go here. The old Mohan's going to have to hurry up. Okay. I know. Here we go. Matching dynamic trend bands, green, pullback signal line, up they go. 7th winning trade. Second level move. Weird, choppy period, 3rd level, 4th. Here's a 2nd level move. Up they go. Green here starts tapping out here on this top plus 250 level. So it just tells you, things are starting to exhaust a little. Once they start pulling back lower, the histograms turn gray here. That's the end of the road. Now, again, we don't want to trade usually past, the last 45 minutes of the market. You generally don't want to trade that. It's just a general rule. Even past 2 o'clock Eastern Standard Time, what's that, 10, 11, 12, 1, 11, yeah, 2 o'clock Eastern Standard Time, you just want to be really careful with the trades. Don't be so anxious to make all the trades and catch every setup. I mean, they're there, but just be a little more cautious when you get later in the day. Look, if you had, like now, we had 5 winning trades before 2 o'clock, that's what is that after commission? My God, that's about, $1,100, $1,200 day on 4 contracts. That's a pretty good day. Take the day off. You can do that every day for the whole year. You can make a lot of money. That's our plan. And our plan is to try to do that for you as well, too. So, again, if you have any questions about our auto trade program, email me at mohan@daytradersaction. I'll send you a full briefing. Okay, new day here. Wow, we finally made it to November. This would be November 4th. After that weekend, that was a Friday. Okay. We're going to speed up now. We're going to go lightning fast. I got to, because I got to get through this so we can get on the recording. Pull back to the signal line after the white line crosses over. The spread right here, notice this is where you got to see that tighter spread when the dynamic trend bands don't match. Pull back signal line here, winning trade. No second level here, just choppiness occurring. White line crosses over here. Spread is tight. Up they go. See that? Spike candles tell you watch out, caution, choppy market action. Sure enough, more spike candles creating an instant fat channel. Well, you got this turning red here. The dynamic trend bands match, but you're already way down at the bottom of a fat channel. Just avoid it. It's not worth it. Look what happened right after that. Choppy action. Huge spike candle. Well, look at that one. 73.68. Got to wait until the white line crosses the dynamic trend. You get the new channel opening. That's the first thing. Here's a white line crossing or a dynamic trend band. Pull back to the signal line. Here it turns gray, but green, but it already took off. But this would have been a valid trade here. Let's see what the spread is. 71.5, 69.5. 2 points. See that? 69.5. 71.5. 2 point spread here. That says buy the next pullback signal line. That's right here. Up they go. Market immediately reverses. All the candles turn red. I mean, obviously one of your first signs of a warning, if you're on one side and the candles change the opposite color, you got a problem. It has to be dealt with. What do we do here? We're just waiting for the white line to cross the dynamic trend band. That's all we can do because that's our system. And they spike lower, canceling the trade because this is a huge spike. Look at this one. 73.75, 70.25. Too big. 3 1/4 candle. Got to wait. Then you just sit and wait. There's nothing wrong with waiting. You have to wait to be a professional trader. More spiking. White line cross the dynamic trend band. This is probably a warning sign. However, when this on bias index number 1 turned green, it says, well, might as well buy the pullback signal line because things look bullish here. 70 to 75 runs up to 76.5 for a nice trade there. Does that make sense? Now we're coming in the final hour. Caution time. Don't trade this. It's 12:30. It's you only got half an hour before the market closes. Most of our boomerang trades are going to pan out within 20 minutes, but, cut risk. Make your life easy. Yeah, this is a winning trade coming in the close. 10 minutes for the close. I know. Boomerang's fantastic. Here's an aftermarket trade. Perfect. Beautiful. But, we have a very, very crystal clear, proven system, and that's what we want to use. We're not gamblers at Boomerang Day Trader. We take precision trades and proven setups that work. We wait for the market to open. You can trade after the market opens. Generally, it's always a little better if it's been open at least 5 minutes or more, at least, ideally more, but, Boomerang signals are there, and that's what we're committed to taking. Here's a green candle changing colors here. White line crosses the dynamic trend band, number 2 here. This one, now you get a cross on dynamic trend band 1 and 2, which is always a additional confirming signal on that side. Pull back the signal line and up they want. Go, our first winning trade. White line crosses the dynamic trend band here. We didn't get a signal to get in early, unfortunately. It's just the way the market was set up here. However, you do have dynamic trend band, bias index 1 confirming a bearish move, but we're still going to wait and follow our rules and trade at a pullback to the signal line, which was right around here. Now, this didn't quite cross over, but you know, you got these red histograms here. Go ahead and pull, but the signal pullback at the signal line was right here. You might have taken them up here if you perceive this crossing. You see the dynamic trend bands are matching as well. So when the minute you see these matching and you got these confirming, just get on that signal line and get short. Okay, winning trade. White line crossover dynamic trend band, pull back the signal line with the spread tight, up they go. I'm going to speed up a little here. A light crossover here, but the dynamic trend band here is matching on a new crossover, which suggests it's one of our surge rules. This comes on one of the videos with the dynamic trend bands when you order Boomerang. Or if you own Boomerang and you need the dynamic trend bands, you order those. They're only 195 bucks. One of the there's 3 videos on there, and they talk about chart patterns that can be used. They're not the trading rules. They're not our trading rule system, but they are chart patterns that you can watch. One of the chart patterns is when the dynamic trend bands cross, generally I think it's about 75% of the time you're going to get a surge in that direction. Well, hallelujah, you sure did on this one. However, that's not always the case, but it's generally something where you use that to weigh off of another trade like this one, trying to cross over. The dynamic trend bands are brand new crossover. Better to wait. You see a new buy signal come in here. Confirmation on bias index number 1 turning green. Pull back the signal line. Up they go for 3 points. There was not a second level trade because we didn't get an arrow showing a down move and a counter channel. So unfortunately, we didn't get a second level trade off of this. Now we get into the good stuff. This is what I really wanted to emphasize with you. That's called steep extended channels. They occur all the time. I'm going to squish the chart together to show you what one looks like. You see this? Level 1, failure. Level 2, level failure to cross over successfully. Level 2, a pullback. Again, these are not trade signals. I'm just showing the chart pattern. Level, a pullback attempt again, which failed. Level 3, another little pullback. Of 4. This is like a 3rd, 4th level move up. Now, by that time, guaranteed the dynamic trend band is going to be very steep. And if you use our pizza rule, remember that? Where you put the cursor up to the dynamic trend band line and you look at that and this, that looks like a slice of pizza. If you got a big slice of pizza, that's not a flat dynamic trend band. Up here, look at that. That's a thin slice of pizza, but still it's a slice of pizza. You with me? See that? You know what I'm talking about, or am I just sounding crazy? It's still here's a flat dynamic trend band. You see, I put the cursor right here, or right here. That's a flat dynamic trend band. Everything else, it's not steep. It's thinning, but it's not flattened yet. So the point is, okay, here we go. Here's how you handle these steep extended moves. Number 1, again, don't let them drag you emotionally into thinking that because it's made a steep move, oh, I'm going to catch the next reversal. It's got to reverse. No, it doesn't. In fact, most of the time, there's a continuation effect. And most of the time, there is choppiness. In fact, sometimes severe choppiness after the market makes a steep run where that pizza, look at the pizza slice there, man. It's huge. God, that's like a Saturday night pizza slice there. This pullback looks like it worked. 78 came down to 75. Yeah, just barely, and it was tight. And you had to get the exact fill on the signal line here. There was not much room to fudge. But look what happened. So the dynamic trend band is number 2 is still steep. I'm going to spend a little time on this now. This will be part of the recording. And look at this. The market not only goes into severe chop mode, but then you see the dynamic trend bands here. A new buy channel is opened here. Now the dynamic trend bands are matching right here and right in this area. So you could have taken a pullback to the signal line. Here this was blinking on and off, so it might not have been solid. But the point is, you can take a pullback to the signal line, or even after this run up with the dynamic trend bands matching, a pullback to the dynamic trend band number 1, which is now crossing the red line, which is also on the videos, giving another potential bullish signal, and up they go. Or just avoid it. It's a choppy mess. I'm just trying to show you how these steep moves, here's what's required. If you really, really want to get into a genuine trade reversal on a trade channel, you have to look at least for a completely flat dynamic trend band like here. Number 2, dynamic trend band, completely flat now, because then you're back into just a regular kind of trade where there's only a slight slope, white line crossover, there's a new sell channel, pullback signal line, and down they go. See that? 83 went down to 79.5. Or wait for the dynamic trend bands to match is usually safer. In this case, it already made a trade, formed a fat channel, and here they are matching again. I'm telling you, these steep up moves, they are relentless. This is a trade on the buy side. You can see that? New buy channel, spike higher, the dynamic trend bands are matching, a pullback to the signal line with these matching and not having hit 250 yet, and up they go. Now you have a flat dynamic trend band. This is a conventional core trade. Problem with this is what? It's too late in the day. It's a higher risk trade. I advise you don't take trades 45 minutes or less into the close of the market, but if you're, you know, a gambler, let me just say it honestly, and it's your money, but, you know, gamblers can go ahead and take the next signal even if it's 45 minutes or less going in the market. I do not record the trades in the track record from the half an hour to the close, just as a policy. Some of them set up before, like this one that occurred this is not in the track record, but you can take it. It was a winning trade here. Market went choppy. The dynamic trend bands matched here 10 minutes before the futures closed, and down they went. So all I'm saying is watch that last 45 minutes. Let's go on to the next day. I'm going to get ready to turn off the tape recording soon, but I want to get through practically where every single setup has occurred so you can understand them. Now, let's see. Okay, we're opening here. Market's opening. Now, what you got to watch for, too, is extended moves that have occurred in pre-market. They're not as important because a lot of volume comes in after the opening, and it changes the face of the market usually. But just keep in mind, this is not an example of one, but watch for really, really extended pre-market trades. Something, you know, really, this is not one here, but a real elaborate one. Okay, so white line crosses over. Notice the dynamic trend band number 1 cross number 2 here, telling you go ahead and take the pullback, the signal line, and down they go. You also have this confirmation here with red bias indicator number 1. Down they go. Here's a level 1. We got a reversal, but we didn't get a new trade channel and then a failure. So no second level trade here. White line crosses over, confirmation here, pull back to the signal line on a matching dynamic trend band, and up they go. No second level and no confirmation. You have to have a second level and a 5-point spread on here to confirm taking an early trade. That was this rule here. These are real simple once you get them. Explaining them and showing things in writing may seem a little complex. They're really not at all. These are so simple. If there's a wide channel spread of 5 NASDAQ points or more between dynamic trend band 1 and 2 after an extended move, usually with a level 1 and 2 move, well, now the rule is that we have to see a level 2 move. You have to see that. You have to see it, this go up, this fail, another level up, and then this spread gets 5 points wide, then you can take the next sell channel. This would not validate taking a second level. You just merely wait for the white line to cross under dynamic trend band number 1. You can check down here on bias index number 1 to see that that turned red. Take the pullback to the sig line, and down they go. Now here's an example, a perfect example of a second level trade. This arrow forms, they're trying to push higher, steep dynamic trend band number 2. This is classic. And then a new arrow going down, you take that next pullback signal line, the dynamic trend bands are matching, and down they go. Now here you see you're not getting a confirm on this, but this is not a requirement. I'm just showing you a new tool to help you with trades that you might be a little unsure of or whatever. Just use the bias index number 1. But this is a classic dynamic trend bands matching. They do most of the work for us, the DTBs. That's why I developed them, and I have stressed less on the bias indicators. They're all extremely valuable, but I'm just showing you how we can use bias index number 1 to help us on some of these trades where you might be a little confused about. Pullback signal line, down they go. No stop outs. You notice how few stop outs Boomerang gets? That's because we follow exact proven rules that I developed over years of trading. I didn't just make these up. I hate to say it, but a lot of these guys, they just make up a system. They don't trade it. How can I know personally of guys that they come out with systems, and I was talking to them not long before that, and they never traded. I've never seen them trade, and all of a sudden, in a few months, they have a whole new system. I mean, how do you do that? Maybe they can sleep at night, but I can't. I've traded this for years before I released it to the public, developed all these indicators. Anyway, so that's steep move. That's the these confirm that when these turn red and they start, when they start blowing out over the 2.5 point level, they're starting to peak out a little. That's fine. Then you look for the gray histograms, and that's when they start rolling over. So again, here we go again. I want to make sure and stress this, and I'm going to turn this tape off pretty soon because I don't want the file to get too big. I want to make sure and get this up on YouTube so we can watch it. This is a steep extended move here, level 1. Yeah, it was just level 1 and 2, but man, it was a steep move. Now notice, when these occur, generally the dynamic trend bands do not fatten out 5 points or more. They tend to ride together for the whole move. They just trail the move. Look at that. Look at dynamic trend bands. They're beautiful. They trail it right down to the exact bottom. Oh, it's beautiful. It's one of the rules you can follow on chart patterns, which comes with the dynamic trend bands. When you order Boomerang, you get all these videos that explain these simple things to you. There's only a couple of them. You don't need a lot. Boomerang's too simple. You don't need a trade room, waste of time, and you don't need a lot of endless trading course that gives you a headache after you read the first couple chapters. Boomerang's very simple to use. Our goal is to get you making money right off the bat so you can feed your family, pay your bills, and have a good life. Go to some of these places pictures I post on the blog there. Here's the thing. Remember, steep extended move. Now, I know this is just a level 2, but these are long level 1, level 2. Man, that's huge. They didn't have a 3 and a 4 in there, but you still got to be careful because this is too steep. What do? Don't just trade the new channel. Fortunately, this just took off to the upside. However, normally this would have been a choppy mess in here. What you do is you wait for the color match, and now, as of today, I'm showing you can wait for the color match on the bias index number 1, then take the pullback to the signal line, which came in right around here, and then up they go. You still got your 3 points out of it, even though you were kind of long in the tooth here on the trade channel. Remember, whenever we have a new trade channel, we want to get in as early as possible, but within the context of the rules. The first crossover with matching dynamic trend bands occurred right on this pullback, but it was pretty tight, and it was also the first green candle on the histogram of the bias index number 1. So you might have missed that, but you could have caught some of these other, wrote it up. When this happens, now listen to me, this is logic. It's just common sense. Oh, you didn't have it written in your rules. Well, if you're playing football and two 300-pound guys are coming at you at 50 miles an hour. Uh, Duck. You know what I mean? The coach doesn't have to tell you that. That's just common sense, right? So you're catching this pullback late in the buy channel. You're saying, well, but I do have a green histogram on bias index number 1. Dynamic trend bands just crossed over, suggesting a surge higher, and they're both color matching. So the market's bound to go higher, but I'm going to get in. And instead of, I'm going to look for my 3 points, but man, if that thing stalls at 3 points, I'm just hitting the exit button. Do you see what I'm saying? Did you catch that? I'm going to look for my 3 points. 77 ran 81. Well, they had 5-point move. But if this ran up to just 3 points, 2.5, 2.75 and started stalling, hit the exit button because you're late in this channel. It's getting fat. And I'm just a suggestion. We're here to trade, make money. The rules are there to guide you, but this is not some mechanical automated system that you just, take a nap and it trades for you. It really isn't like that. Boomerang requires discretion, and that's why we have these rules that I've developed, and I'm showing you how to really trade the markets instead of just, be ripped off by some company telling you, oh, you just push a few buttons and you'll make all this money. Well, maybe for a day or two, but for a 20-year career, 15-year career, I assume that's what you want. You got to learn how to trade. That's why I show you all this stuff. Don't cry that it makes it complicated. No, you need to step up and realize that you got billionaires trying to take your money. You have to learn how to trade. These are very simple things I'm showing you. Maybe at first they seem complicated. That's because you're not that experienced in trading. You have to look in the mirror and realize you're not that experienced in trading. I'm showing you these very simple basic things in an incredibly low price package that will put you into making money right away without having to learn all these complicated, endless things. Oh, God, look on YouTube. Look under Trading the Futures. Endless videos, methods, this, that. Most of those guys aren't winning traders, but they dare make a video and tell you how to win, right? Anyway, white line crosses dynamic trend band. The pizza's thinning out. It's flattening out. You got the spread is thin here. Pull back the sig line. Down they go. This is where the spikes, we like spikes when they're on our side of the trade. They get us out of the trade and help us relax and go on to the next trade. Massive spikes still, even though they favored your trade and help you, they don't tell you sell more short. They tell you caution, caution. Alarm bells are going out, sirens. Whereas for the average trader, their emotions are taking over and saying, I got to short more. Don't do it because you would have stopped out on all of those. We wanted this trade. Now we're standing aside. Look at this candle here. This is pure whipsaw. We don't want anything to do with that. We are not anxious to trade. In this case here, you got level 1, a very sloppy crossover, which was not a trade because it was all whipsaw. You say, well, should I be trading now? Well, with the whipsaw still going on, look at this one here. 78 half, 75, 70, about 3 points. I'd just stand aside and forget it. Why? Because I don't care. Now it's getting late in the day. Well, is this a good trade? Well, here's the difference between this one. White line crosses or dynamic trend, which is flat. Now the colors match. See that? They're very tight. The colors match, and you've got a new bias index 1. That's why I introduced this today. Well, market does look like it's going to push higher. You get your pullback here at 78 1/4. They run up to 80 half. This is that type of trade I was telling you about before. Whoa, whoa, whoa. Be careful here because all of a sudden you look and you go, I'm on the top of a fat channel. You would have survived a pullback and ended up a winning trade. But on a trade like this, and I hope some of you hear this because I get questions. I've had questions in the last 2 days on this. What should I do when this happens? Because these have changed to green, and that's why I'm introducing this today, odds do favor that they're going to continue higher, most likely. Not always. No guarantees in trading. but you have the dynamic trend bands matching too. So if you got long up here, here's the basic thing is you got to figure that dynamic trend band number 2 should hold back any selling, which it did here, but there was a little blip below. Might have shaken you out. It didn't shake the trade out because you were short or long at 78.5, 76 quarter. You're still in by a quarter, and then they ran up and fed you the total profit. But now also it's late in the day. So this is just one of those challenging trades that I get into, you get into, we all get into, and that's the way you deal with them. You got to look for dynamic trend band number 2 to hold up that price. If they dip below it and then shoot back up like in this case, well, all right, I made it. Or you got stopped out here. No big deal. End of the day here. And again, you know, last minute of trading, we don't take those trades. This is all pre-market. They're winning trades. Trade at your own risk, but we don't take them. Okay, I'm going to hurry through one more session, and then we're going to go ahead. We've gotten through about 5 sessions so far. Okay, so here's the market crosses over here. Okay, we're opening, the market's opening here. This is a pre-market, well, just barely open market level 1, level 2 trade here. 80 comes down to 76 for the gain. After a level 2, we look for a spread. Is the spread 5 points wide? 83 quarter, 78.50. That's close enough. It's about a 5-point spread. It's very close. Go ahead and take the next pullback of the signal line, and up they go. White line crosses dynamic trend band. The trend bands are tight. Pullback signal line, down they go. You see that? Instantly, 3 winning trades in a row. Here's a second level trade. They try to make a reversal here. Just a 1 tick reversal. This is not really a genuine, you know, 1 candle and 1 off. It's not really a counter trend trade. This is more of a counter trend. Here, you'd watch for that. You wouldn't have gotten short here. Watch for a genuine counter trend with at least a couple candles. Then pullback signal line, down they go. So 5 winning trades in a row there. Same rule here. Really extended move, and I've already gone over those. I'll go with another one. This is a level 1. Let's see. 1, 2. This is a 3rd or 4th level move, so you've got to wait. You just got to bite it on this one and ignore this trade because you really need to see the dynamic trend band number 2 flatten out. Just because it crossed over, yeah, it's going to surge a little in this case, in this 47.5. This would have been a winning trade, but I'm telling you, it could have gone really choppy and stopped you out. Better to wait on these extended moves. Don't let your emotions get a hold of you and think you got to hang in there and try to figure these out. Just wait for dynamic trend bands to match. Wait for the bias index number 1 to match. Try to catch a pullback. They spiked lower so quickly. You just got to wait. Now look though. See, now you've got the dynamic trend band number 1 and the same side number 2. After all this, I know it took a while. Well, look, frankly, it was from 722 to 735. It was a 12-minute wait. Big deal. And it seems emotionally like you missed a trade here. You didn't. It wasn't part of the rules. And you missed a trade here. You didn't because it wasn't part of the rules. But look what happened here. Now you get a nice, smooth, new buy channel. You're already on the same side. The dynamic trend band 1 changes color and even matches dynamic trend band number 2. These don't matter. You got your gray histograms on the same side of the 0 line, but this is just a core trade here, and up they go with nice, peaceful, smooth trade. You avoided all this erraticness because your emotions said, oh, I got to get in the reversal. They're going to reverse. No, in fact, as I've pointed out, often these steep declining or advancing moves will have a small reversal, and then they'll continue more or go into extreme whipsaw. So whenever you see those, you should tend to think, just fight your emotions, say, no, I'm just going to wait until you see something nice and crystal clear and smooth like this. This is what we're going to look for on our auto trade program, you know. We're going to trade most of the setups, but we follow the rules very, very carefully and make sure to get in the trades that we feel are going to really do the best for us. Level 1, here's a level 2 that failed, or a level reversal that failed, and then a counter trade. This would have you either gotten stopped out if you got long here. I don't really see any reason why you wouldn't have gotten long here, other than the dynamic trend band number 1 had changed color. But frankly, in most cases, you wouldn't have gotten long on a second level trade unless the dynamic trend band was the same color, dynamic trend band number 1. So this would not have been a buy signal. You would have waited and watched what happened. White line crosses over dynamic trend band, pull back the signal line with the spread here being 2.5 points or less, and down they go. Those are the trades you want, those nice smooth moves. Nice move to the bottom. Notice we didn't get a second level trade because there was not a counter trade. Had this gone short again, then it would have been a second level trade. Instead, the market wanted to turn up again, so we wait for the white line to cross over, the dynamic trend band number 2, and a pullback to the signal line. That occurred right here at 38.5, and they went down to 35.5, so this would have gotten stopped out. It turned into, with this arrow here, creating a second, a counter move and a second red candle, makes it a genuine second level move here when the buy reverts to the upside, pull back the signal line with dynamic trend bands matching, and matching on bias index number 1, and up they go. So yeah, we got stopped out here. In hindsight, oh, you know what? Don't want to sound flaky or anything, but I blew it on this. This would not have been traded because the spread's too wide. 37.75, 34.25. You see that? So I actually made an honest mistake here. This would not have been a buy. The spread's too wide. This is where the genuine trade would have been. This would not have been a sell, and you would not have been stopped out in this because you wouldn't have been long up here. My mistake. Sorry for about that. Happens once in a while. Even old Mohan will make a mistake. Welcome to the wonderful world of trading. This is not an extended move. It is keep in mind, when the white line crosses over dynamic trend, it resets the whole pattern. This was not a trade. I forgot to just quickly look at this spread. In live trading, everything's moving very slow. It's easy. You're constantly thinking about this. But this does reset the pattern. Level 1, counter move. This was a level 2, which ended up being our first trade in there. So the point is that the next move we want to make has to be a crossover of the signal line. I mean, the dynamic trend band number 2, which occurs right here. But again, the spread, 47.25, 49.75. Oh, it's 2 points. So you could have taken the pullback to the signal line on this one here, and then the spike took you out on a stop here. So this is where we genuinely got stopped out. Dynamic trend band crosses over here, and the spread is 2.5 points or less. So we would have taken this sell on a pullback signal line right about here, and we would have gotten stopped out in this one. However, it was made up by this one where the dynamic trend band crossed over, pullback signal line, down they go. So this is the beauty of Boomerang. How many times we got stopped out during this whole session on the last is about 6, 7, 8 sessions? Hardly at all. 1 or 2, 3 times maybe. And almost all the time, in almost 90% of the cases, Boomerang will turn around and hand you another trade that makes it back, plus a few extra ticks. So you not only make back the loss, you got a little extra tick. And again, an long extended move. Now here's a good example, and I'll finish up the recording with this. I want to get these long extended moves so you can really see how these work. See this coming down here? Steep dynamic trend band number 1 is still matching. Yes, there's a crossover, but that's don't be so anxious to reverse. This is what I'm trying to get through to you, is that when you see these steep lines, just think a sign should go off in your mind flashing, a white sign with big black letters and exclamation point. Wait, 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 wait. Don't let your emotions get you all thinking you got to reverse these. They're not going to reverse that quick. What's happened, I can tell you, technically, the 5-minute is rolled over to bearish. The 13-minute chart is rolled over to bearish. The 30-minute and the 60, most likely on these, have all turned bearish. That probably occurred right around the 5-minute, probably right around here. The 13 somewhere in here. 30 probably rolled over on it here. I mean, those take time to really pan out and exhaust themselves. Anyway, that's another subject for another webinar, but the point is, and we will have some of those coming into the new year here. Now you get the dynamic trend band definitely crossed here, and one may say, is this a sell signal? Yes, because the dynamic trend bands are matching color. So you trade a signal, pullback signal line right here at 29 even, and down they come to 23, a big swoosh to the downside. Now this is where finally this extended move has exhausted itself. Why? The pizza rule. Get that cursor up there. Look at that little, right here, little tiny slice of pizza. It's flattening out, right? Your band here, dynamic trend band 1 has changed. You got a new buy channel. And you just wait till the colors change. You can wait for one of these if you want, if you really need to confirm. But generally, once these dynamic trend band colors change, you still got a fairly early pullback in the signal line here or here, and up they go for your 3 points. And then it's getting late in the day, but this final trade crossover here, tight or matching of the dynamic trend bands here, red signals here, pullback signal line, down they go. So I'm going to go ahead and end the recording now. Stay on the webinar, and I will continue to show you more methods that we use for trading the market.